Good afternoon. Time to wrap it up for August the 20th, 2014. Just a quick review of our F4 screen. We go into the overnight analysis. We came in this morning wanting to buy the 73, 75 area. Right here, you can see we had our lows. We thought that we would at least get a retest of 80. The market did trade up to 83. The news, the FOMC minutes hit right here. We reviewed the minutes. We couldn't find that anything had changed. The market wasn't able to break the 75 area. Came back up and took out resistance at 80, and we went up and made a new high for the day. And here we sit. We're going to close strong. So the market met all of our expectations. We liked the long side of the market. We were buyers. We got our buy area correct. You could have been long at 75. In anticipation of a retest of 80, you got it, and that turned out to be the trade of the day. The news breaks out of those minutes. Interest rates low for a long period of time, but more Fed governors were arguing for sooner rather than later. So nothing has really changed. Here's your retest failure off the low. You could have been long in the 79 area after that retest, and the market traded up to 85 plus for another winning trade. So it was very, very slow day trading, but the idea and our levels were correct, and if you'd taken the trades, the recommended trades, you would have done pretty well. Okay, on to our overnight assessment, and we always start the same analysis on the F1 chart every day. Higher lows lead to higher highs. Volume is moving up in the distributions or staying the same as it was before. And we're dealing with nothing but P's. So this screen tells you to be a buyer. The large institutional money is still going to the buy side. When we look at the F2 screen, is this confirmed? I believe that you'll see that it is, and we do split right there. Nothing had really changed in the news from the FOMC minute. They might be raising interest rates sooner rather than later. Some analysts said they took on a little more of a hawkish tone. I don't know. When I read it, I didn't see that much had changed. So we had a P that favors higher prices. Right here we have a move out of the middle. No reason not to expect that the market's not headed for 2,000. I mean, that's been talked about for a long time. Now, I don't know if we get there and what it takes there, but Yellen speaks on Friday. We're very close to new contract highs. My guess is we're going to see new contract highs in the Yellen statement. Once her remarks are completed, we'll see a little profit taking, and then my guess is we'll close the market strong into the weekend for another up week. Make all the stock market people happy, make the Fed happy, make the current administration happy. Stock market's higher, good times are just around the corner. So right here, the easiest trade to see is selling failure not to extend the day session range. So the first sell will be sell failure not to take out 85, 86. Second sell will be 89 to 91. On the buy side, we have a new move out of 80, so 79, 81 will be buy 1. And then we'll raise it up, 75, 77 will be buy 2. Tomorrow's news will be jobless claims. But the market will be held in check by Yellen's speech on Friday. Okay, taking a look at the note, it is pointed lower. And we're dealing with a lower high and a lower low. That favors the sellers, so we'll enter the market as a seller tomorrow. We have an auction next week. The pattern has been run prices down into the auction, bring them back into the auction to move the paper. It'll be a 2 through 7 year auction next week. That paper's fairly easy to move. Currencies got slammed again, and you got two ways to make money by being long treasuries. One, off the coupon, which isn't very high, and the second is off dollar appreciation. And the capital account has to be at zero at the end of the year if you want to continue to export to the United States. So there's a lot of incentive for countries that export to the United States to buy treasuries, especially in the short end. So we're sellers first to see if we can't take out the lows and extend the range to the downside off of this screen. Looking at the F2 screen, will it confirm it? Yes, it will. We have a double distribution. Launch, we said we thought lower prices were to come. We said if we wanted a resting limit buy, we would have it out there at 25.5, 26. The low is 25.5. But we did expect them to go, at least get stops below 126 even. So everything is pointed lower on this. We have our tractor at 25. I think the market will get there in the overnight session. And the question will remain whether 24.25 changes from support until resistance. I'm going to give it a little room. We're going to buy 17s to 21s. But because of this high volume number right here, it's okay to buy 25s. So we'll put a question mark at 25. On the sell side, we're going to sell failure to take out 30 to 02. Then back where we were this morning, sell 7s to 11s. I think if we get over 26.02, the market's going to trade higher. Okay, on the 30-year, the option spread held actually unchanged today. It didn't really fall out. So no matter what the news headlines are, the way to play fundamentals and not have to worry about news spikes or anything else is via spreads, and that's where the big money is in all contracts. So we have this low at 17. We're at 21. We'll make 13 to 17 the buy. And on the sell side, we're going to sell failure to take out 24.28. And then the next trade will be 24 to 28. Then we'll have 31 to 03 for sell 2. If we can't take out this low, I think we can get a nice little rally back. And the only thing that I see the biggest dynamic that takes us lower is the auction next week. The news around the globe remains a little unsettled. With McDonald's being shut in Russia. There were 14 airstrikes in Iraq today. You can pretty well guarantee that the next reporter in line to lose his head is probably going to happen. I mean, there is no way that you can describe the mindset that does what these people do. I mean, it's savagery and in its most ugly form. These are barbarians. This is going back. This is medieval. And you can't negotiate with them. it really is with that mindset to the death. And I don't know what it'll take to get the West stirred up enough to go after them. But the first step has been taken. The Catholic Church has become involved, and I always felt that we wouldn't start to get on top of this problem until the Catholic Church took a firm stand. As far as the Protestant Church goes, it does not exist in Europe anymore. And in the United States, they fall over themselves for social justice and turn the other cheek, so we're not going to get any help from them. So a couple of more big atrocities, another 9/11 event someplace like that. Unfortunately, it's probably what it's going to take to wake us up. So things are unsettled internationally. Things are unsettled on the banking front. The economies, more often than not, show a little weaker than forecast news. So not comfortable times. So while gold can sell, again, I think we find buyers on the brakes. So we had hoped to buy the 88 to 90 area. That was our first buy today. So we'll make it 85, 88, let them get stops below the overnight session low. And then we'll make 80, 82 for buy 2. We are in a sell mode, so we can get short. Selling 93s to 95s, try to catch this area right here, and then 98 to the buck. Got it. Okay, crude oil. We are definitely in the October contract. I think crude is seeing a little more unrest drift into the international scene right here. The airstrikes are up. We don't know what the next atrocity is that ISIS will commit, but it's coming. We got this single print here in the 65, 70 area, so we're going to make 75 to 94, sell 1. We're going to take it up a little bit, 94.25 to 50 for sell 2. On the buy side, we're at 48. We had hoped to get in 92.75 to 93. We were there, so we'll make 93 and a quarter, buy 1. And then buy 2 will be 50 to 75. The Russian convoy supposedly made it into the Ukraine unscathed today. And hopefully that will remain the case. And the world is awaiting the bad guy move by Putin for his next takeover. I mean, if I were Eastern European countries and knowing that the EU can't protect us and counting on the United States, I mean, it would give you pause for thought. I mean, you can't count on it. And I think that realization has been hitting the market this week. So we had some pretty heavy selling today. We wanted to sell 95s to 33.05. The high, I think, was 98. Caught this market perfectly. Got a very, very clean break at 75. We're at 65. So the 70 to 80 will be S1. Then 90 to the buck will be S2. On the buy side, stops below 50. So we'll play for 40 to 50. Buy 1. And then our 15 to 25 for buy 2. Wireless, and the best play for us, and it's been this way for, gosh, a little over 6 months, is every time this thing rallies 50 to 75 ticks an hour day session, sell it in London. And that sets up the next round of selling. And I think that'll remain the play. That's all I have for August the 20th, 2014. It'll probably take about an hour to get everything posted up and around. I'll get busy on that. In the meantime, you all have yourself a great evening. Enjoy the last couple of weeks of summer, and I'll see you bright and early in the morning, 6:45 Central Time. Enjoy yourselves tonight. Can you do your market recap on the bond? I thought I just did it. All the fundamentals fit, and I thought I just gave you all the price points on the bond. So what do you want me to do differently?